Good afternoon from Germany. In 15 minutes the market will open. And yeah, sorry that I wasn't able to live stream the numbers pre-market, but I was in an important meeting and therefore we will live stream pending home sales today, half an hour after the market is open. So let's have a look at the numbers which came out pre-market. We had today PCE price index and core PCE price index. And as we see, core PCE price index came out as expected at 0.3% month-over-month number. The year-over-year number was 4.4%, so also as expected, but the normal PCE price index without core was a little bit lower than expected. So here we see with the oil prices, electricity and so on, we had less inflation. And yeah, because the prices dropped, we have seen natural gas, we have seen crude oil in the previous days and months. And these prices dropped heavy and therefore the PCE price index is lower. But here with core PCE, we don't have the prices for these goods and therefore it came out as expected. This one lower. This is normally good for the market. Less inflation risk should act as a catalyst to the upside. So let's see what happened with Nasdaq. Nasdaq went up on the news, as you can see here. 45 minutes ago, market went up, but went down right again. And yeah, almost nothing happened. We are still trading here at 12,040 points right now, right above the psychological 12,000 points level. Let's see it on a daily time frame. I know I have a lot of lines here, but we drew them in the previous live stream yesterday, and you can still see these resistance areas still in place. Yes, yesterday we closed really high, as you can see here at 12,100 point. The high point was 12,113 points. But I think this was just like a short squeeze. So a lot of bears had to close out their positions because we went really high yesterday. And it can still pull back a little bit today because you see we have a lot of room to the moving averages here. Of course, it is an uptrend. So the next level to the upside would be 12,260. And as we discussed yesterday, as soon as we close above here the week, then also on a weekly time frame here, it will be a strong bullish candle, and therefore we will have more upside potential here within this high area we had on December 13th, 12,260 points to 12,330 points here. Let's see where we close today, or if we see a little sell-off, because we also had negative news from the earnings side. We had the Intel news yesterday, and Intel came out worse than expected. Let's just bring up Intel. Intel was yesterday after market close, and the news were here. The estimate was 20 cents, but they came out with 10 cents per share, and revenue fell also short with 14 billion instead of the expected 16.3 billion. So yeah, a lot short, and therefore the stock is down right now. Where's my chart for Intel? I don't have it here. I will just open it for you. 9.8% in the red right now. Just delete the news here. So you see $27.10 before the market opened, and yesterday we closed above $30. Let's see how far we will drop today. We have the next support here at about $25.50. Maybe we will not retest it. Market is still stable, but the news were not good at all. But I still think that Intel is an interesting company if you want to take on a long trade, as swing trade, or even as an investment. Let's see it on a week chart here. So we had the double bottom here at about $25. We pushed through here to $24.59 low in October. But we are in this sideways trading phase, and I think it's an interesting option trade maybe, because this can cause a bad surprise to the downside here, these 10% down, and therefore the implied volatility can stay at this level of about 40% or even rise, and then you can get a good premium for even lower strikes So what I want to trade live today in about 10 minutes when the market is open, I will watch the option premium for Intel options. So if you are not into options, you will learn a little bit today. This is option trader of my trading platform at Interactive Brokers. And here when I open Interactive, I can see all the puts and calls. And I normally trade 45 days until expiry. So the normal expiry on the third Friday of a month here is March 17th. It's 49 days until expiry. And yesterday we closed here for the one standard deviation was the $26 strike yesterday. But now we are 10% lower at $27.20. You can see here. And therefore, I think that we may get a $25 or $24 strike as a first standard deviation. So we already see the deltas here, pre-market. 22 delta is the 24 strike, and 14 delta is the $22.50 strike. So we can go even lower, $22.50 strike. And yeah, let's see what the premium will be when the market opens. I want to have about 35 to 40 cents. If I can get more, then even better. So I will sell this put here for 22.5 strike for 35 or 40 cents minimum. If I can get more, even better. And then I just want to see that the implied volatility is crushing in the next days, or the stock can rise again or just be stable. And then I can collect this premium. I'm aiming at 80% profit, so when 20% of the value when I sold, so when I sell at 40 cents, for example, I want to buy back these options at 8 cents. So this is 20% of 40 cents. And then I want to buy it back, maybe in 1 or 2 weeks. And then my trade will be closed and I can keep the profit. So when I sell for 40 cents, this means 100 times 40 cents, this is $40. So for every contract I sell for 40 cents here, I will collect $40 in option premium. And when I buy back later for 8 cents, I will have to pay $8. And the difference of $32 will be my profit. So I will collect these $32 hopefully within 1 or 2 weeks. And therefore I will sell, of course, more than one contract to have a little bit more premium in total. Let's see where the market opens in about 7 minutes. What else is interesting today? I will have a look at crude oil again. Crude oil is pushing into this area between $82 and $83. The previous high point here was $83.14 back in December 1st, but you still see this is a huge resistance area, and we didn't manage several times, 1, 2, 3, 4, maybe 5 times to get above these levels. And therefore it will be interesting because the markets are rising, therefore normally crude oil prices also rise. The numbers from the economy were good yesterday. Let's see how the housing numbers will come out. Yeah, it's let's go back to the calendar here. The housing numbers is half an hour after the market is open, the pending home sales, and the projection is minus 0.9%. I don't know what to expect from the numbers here, but it can act as a catalyst again, just to see more movement to the up or down side. And I would never trade the outcome of the news, just trade direction, what we see. And right now we see that market is still stable, but if we push above previous highs, above 12,100 or below 12,000 level, then it can be more interesting to take on a new trade. And also crude oil should move, because when there is more demand from the economy, then of course crude oil prices can rise. When there is less demand from economy, then crude oil prices should drop. And with WIX, we see there is not a lot of expectation for volatility in the next 30 days. WIX is at 18.79, so pretty low compared to previous days and weeks. No fear, almost no fear here. And with Euro USD, where's my Euro chart? Here. We see a drop. So this is interesting to see, because yesterday the markets went up, but Euro USD was stable and dropping at the end of the day. So this can act as an early indicator. Why is money going back into US dollar? This is the largest pair of US dollar index. If you look at the DXY US dollar index, you will also see 60% of US dollar index is the currency pair Euro USD. And when we see fear in the market, then we normally see a flow back into US dollar and back out of the riskier assets of stocks, bonds, and so on, back into cash, into US dollar cash. And this is what we can see here right now. We see that the euro is dropping, US dollar is getting stronger here. And this is interesting to see because markets are still stable and are above 12,000 level in Nasdaq. And therefore this can act as an early indicator. So I would watch Euro USD because it was already interesting to see yesterday. And as soon as we drop here below the previous lows, then it can act as a catalyst as well, like the news. So have a close watch at Euro USD for the stock market if you want to have an early indicator for direction. Let's have a look at ES for S&P 500. It is still above the previous highs here. So yesterday we went higher to 4,075 points, just below this Fibonacci level here at 4,087 points. Let's see where we close today. We will have a support here at the 4,030 points level. This is a barrier here. Let's see if we can move higher. This was the previous high from December 14th and should act as a resistance level. But it's looking more bullish than Nasdaq because here you clearly see this is now a supporting area and not a resistance area like we have on Nasdaq. On Nasdaq, on a day chart, on Nasdaq, this should act as a resistance area, and we are still within this resistance area and not above the previous high levels. But let's see what will happen here for the closing of this week. The news from the economy was still good, even from the labor market, no weakness at all. So let's have a last look on FedWatch tool before the market opens in 2 minutes. Next week, Wednesday, we will have FOMC meeting, and the expectancies are still 98% for a 25 basis points rate hike, and it has shifted a little bit back to 50 basis points. As you can see, 1.9% are expecting 50 basis points. Yeah, I don't know if this will happen. I still think that we will just see a normal interest rate hike of 25 basis points, but it shifted a little bit back. As you can see, we had 99.6% yesterday, and today it's 98.1%. Yeah, but still the same probabilities for the high point. Next March meeting, 84% probability for another 25 basis points move up to 5% level. And this is interesting. This changed a little bit because it was 2 drops at the end of the year for the interest rate level, but now it's just 1 step back to 4.75% in March, and 32% probability for the same level, 31% probability for 4.5%. So there's still some indecision here for the end of the year, but the market is pretty sure about the next months here that we will see a high point at above 5% of interest rate level so far. So let's see the market open and then trade our Intel trade. So I will just log in the another account where I want to trade my Intel trade as well. So I missed to open this one, but I'm pretty fast. So let's see if I can enter it just here on my smartphone. Log in. Yes. Okay. So let's see market open now. Intel opened at $27.10, about the pre-market price levels, and here we see about 20 cents left for the 22.5 strike. This is in delta 11, so I can also switch to a 24 strike. This would be delta 20, and you will still get 30 to 40 cents. That's still a huge spread here, more than 15 cent spread. Maybe wait for another 1 or 2 minutes to have a better spread here, and then I can have maybe better prices. Stock is still dropping, $27 now, maybe a little bit fear off, and then I can hop into my position here. I think I will go $24 strike because yeah, it's delta 2021. It's okay. It's at the level I normally take trades with between delta 10 and delta 20. So I prefer delta 60, but because there's a $1.50 difference between these strikes, I can only choose between delta 12 or 21. But this is my favorite price level I want to have, 35 to 40%. Implied volatility is still high. Let's go back to Intel stock to see. The implied volatility is still up. Let's see it on a 5-minute time frame. And we still see high implied volatility. Stock is rising again. So my trading platform has loaded. Let's see if I can get now this option here. I will enter the 24 strike. Maybe I can get it for 35 cents. Let's see. I will just enter it here. Intel, and maybe I can also get 38 cents. I will try first with 40 cents, and then I will get down with the price. And I will just sell 5 of these, maybe for 0.40. 38 already ran down because the stock is rising. Sometimes it's pretty fast and you have to enter your order quickly. 39 cents. Let's see. Stock is coming back a little bit. Maybe I will have the chance to enter here for 40 cents. So here's my order placed. You see now 40 cents at the ask price, 36 at the bid price. And maybe my order will be triggered or not. Maybe I will just go a little bit lower for 39 cents. So my order will be in front of the book here on top of the book. Still 3 cents difference between bid and ask. Normally we see only 1 or 2 cents, but we sometimes need 5 to 10 minutes the market to be open to have more liquidity here in the market. And yeah, I could still enter here at this level. I will just have a little bit more patience because you see the stock is dropping again. So I can probably enter here for 38 or 39 cents. This is my preferred price range between 35 and 40 cents. I want to take on these. Normally I wait for 50 cent option premium, but this stock price is pretty low here and the implied volatility is not so high like Tesla or other stocks, and therefore I have to accept a lower premium level here. So stock is holding the $27 level, so I will move a little bit lower with my price level. So here's another one trading for 37 cents. Maybe I can get now a fill for 38 cents when the stock is dropping a little bit more. Retest the $27. What is the market doing overall? Let's see Nasdaq. Nasdaq is rising again. 12,080 points. Retest of the highs. Made higher highs than pre-market, but not the highs of yesterday. 12,113 points was the high point of yesterday. And here is my fill for 38 cents in the option. We are below $27. Now let's see if it was a good trade or not. I will have time now. It's not a day trade, it's a swing trade. So I have time, and I only opened 5 contracts, so I can still order more. It's just a small trade, and I can still double the position if I see better premiums here for 40-45 cents. I can still enter more because I still think it is an interesting trade to take on. But you still see now the delta is already going down because implied volatility is dropping now. It was 37% before, it is now 31%. So there's less expectancy for volatility, and this causes the option premium to go down. You see here now in the first minutes option premiums come down because stock is just flat here now, and as the volatility drops, the more the option premium drops because less expectancy for volatility, and therefore less premium is paid for the same option at the same strike level. So my strike is now at the $24 level. It is here at, I have to go on a week chart to see this level. It is at the $24 range here. So you see now below the previous lows, so these levels should hold, else we would see more sell-off, and I don't want to be in this trade anymore. So when we break the $24 level, I will be out of this trade. I will close with a loss. And if nothing of this happens and we just trade sideways or go higher or just implied volatility drops, I can make money because time is in my favor when I'm an option seller. I sold an option for premium, and when nothing happens, the premium of the option decays by time, and I can collect the premium and make money just by sitting on the position and doing nothing. Okay, let's see what is going on here. Maybe the stock is dropping a little bit more, but implied volatility is also dropping, so I just have to wait. But maybe I can get 5 more contracts for a lower position. I normally try to go in a position with half position size at first. If it's going in the right direction immediately, then perfect, then I can make money. And if not, I still have half of the position size to enter a second tranche here, maybe at a lower price level, maybe around $26 or $25.50. Let's see where the option premium is then. And if it's at 45 or 50 cents, I will enter 5 more contracts here. Okay, will you close Tesla puts or hold into them for FOMC meeting? I have no open Tesla puts. I had the short position in Tesla. Let's just see Tesla chart. Where's my Tesla chart here? It was closed already because you see we are above the $161 level. So the short position is closed now. Markets are too bullish. You see a strong trend to the upside. As I told you yesterday, it is a trade with a low probability because it is a really strong trend. There was no signs of a reversal. The only sign was here that we were rejected by the Fibonacci level, the 61.8 Fibonacci at $161 and 42 cents was the high point yesterday. We went down a little bit, but only about $2 or $3, so almost nothing. It's still a strong stock, and this were strong earnings from Tesla. So let's see how far the stock will go to the upside. I have no open position here. I shorted the stock directly yesterday or after hours the day before yesterday. But yeah, we can probably see a pushback in this area here. This should be a stronger resistance at $175 because you see this was previous support. So on a weekly time frame, you see this was a clear support here for about 5 weeks, and therefore this should act as a stronger resistance on a weekly time frame. And yeah, this still $10 to go to the upside, but there I will probably retest with a small amount of money to go short in the stock directly. As you can see, it's now low implied volatility, so low for Tesla, yes, still higher than Intel of course, but low implied volatility for Tesla, and therefore it's interesting to take on puts, long puts, because they are cheap compared to the past of buying Tesla puts, because here you see at the low point when we were at $100, implied volatility was at 87%. So 87% movement, expected movement for the stock over 1 year. And you see now we have 64% to the upside from this point here. So the market was not expecting low volatility, and it was right, because now we went back heavy. But now the market is expecting not a lot of movement, so only 55% movement over a year. And therefore the market can still be wrong, because we can still retest the 100 or go even lower. And this is interesting when you buy puts, because what happens when the stock is dropping again? You buy it cheap now because a low implied volatility figure is priced in. But when the market drops or the stock drops, then there will be more fear. Like the last time, you see these 4 weeks when we went down, implied volatility went from the 50% level to the 87% level. So this change in implied volatility, this rise, will cause that the option premium will go higher. So you will earn on 2 effects: the going down of the stock, so this is delta effect, and Vega effect when the implied volatility is rising. So you can earn on these 2 effects. You will have one factor against you when you buy a put option, and this is time. Time is against you when you buy an option. So every day passing by, you will lose theta decay. Theta is not in your favor, but 2 factors will be in your favor, and this is implied volatility rising and the stock price coming down. So you can do both. You can short the stock directly, or you can just buy a put option on Tesla on what strike ever you want. So I would suggest the 160, 150 strike, not too far away, so you don't pay too much time value, but you can still make some money here without overpaying. I would always choose an out of the money option with about 60 days until expiry, and yeah, not too far out of the money. You can also do this, but you never know if we really will drop back to the $100 level. You will have more room percentage wise to make money, but you will have to risk less, of course. You will have to risk more if you choose a nearer at the money strike, like $150, $160. We can have a look at the option prices for Tesla. So then we know what you would have to pay on Tesla options. If you choose the 60 days, so 60 days would be April. This is 84 days, maybe a little bit too long. So yeah, maybe it's difficult because here we just have March, April, 49 days, 84 days. Normally I would pick 60 days. So I would go with March, maybe March, because April is a little bit long. I would pick March to 49 days, but then you will have a higher theta decay, of course. Normally I would pick between delta 30 and 40. So right now, delta 40 would be the 160. So this will probably be a delta 30 when the stock rises up to $170, $175. So this 160 strike is now priced with about $11.65, but it will be less in about a week when the price of the stock is maybe higher. And then you can buy it for maybe $5 or $6. And yeah, just earn money when the stock is coming down again because of these two factors. So delta is making you money when the stock is coming down. And here you see Vega. So this is implied volatility. For every percentage point the implied volatility is rising, you will earn 23 cents in this option. For every percentage point implied volatility is dropping, you will lose 23 cents. This is the option figures, what they tell us. And the delta says that for now it's delta 40. So this says 40 cents per every dollar Tesla stock is moving. So when the stock is moving $1 to the upside, then this option here will lose 40 cents. And when Tesla is dropping $1, then this option will gain 40 cents. And yeah, you can use these figures just to see how the option price will move within the next days. If you want to see the theta decay, then you go here. You see 13 cents theta decay per day. So every day nothing happens, all the rest stays the same, then you will lose 13 cents per option here, or $13 per contract. This is theta decay, and this figure will grow the more we come near to expiry to March 17th. Then theta decay will increase. So you have to keep these in mind because you see the multi-dimensional trading with option. It's more complex than just shorting a stock or buying a stock because you have all these factors you need to have a look at if you want to trade options. Okay, back to your questions. Yeah, I checked Tesla. Okay, we talked about Tesla now. So now you know what to do or not to do. So still some room to the upside. Of course, it can also drop here and close below this Fibonacci level again on the week. But for now, it's still looking bullish. We talked about it. Next target should be between 170, 175 at the high point. This is Fibonacci level, and this should be the stronger resistance area. And then I would look back at the option prices or shorting a stock directly. Market is on the rise. We tested 12,100 point level. 12,104 point was the high point. Still 15 minutes until the news from the housing market come out. And our Intel stock is, yeah, staying stable around the $27 level. You see implied volatility is dropping further. Let's see what this does with the option. Intel Corporation here, our 24 strike. I sold the 24 strike at 38 cents, and you now see the spread is now pretty tiny here, 35 on 36 cents, only 1 cent spread. Now the liquidity is there. You see, if you wait for 10 or 15 minutes, you will have more liquidity, but the problem is that the implied volatility has already dropped, and you will have, yeah, less option premium sometimes. So it's always a thing where you have to think you want to wait for having better liquidity, or you don't want to wait, but then you have to figure out this higher amount of spread. Okay, now I'm a little bit in the green because I sold at 38 cents. I could buy it back right now for 36 cents. So I would make $2 profit per contract, times 5 contract would be $10 $10 gains. So that's almost nothing. I told you it's just a small trade, but you see it's already in my favor, working in my favor. Even if the stock is just staying stable and ending the day at 27, I will have made some money because implied volatility is dropping right now. And this is the interesting thing, the multidimensional trading in options here. Okay, Daniel, thank you for sharing your knowledge with us. What I would be very interested in as a beginner, what does a typical day look like for you? Are you in front of the PC all day? No, of course not, because I'm not the day trader, so I do not day trade. This trading style I do here is swing trading. With options, I have normally 45 days until expiry, and I can close these positions after 1 or 2 weeks, sometimes 3 weeks, but then the trade is done. So I have collected my premium and I'm at my profit target, and this happens in 80 to 85% of the time. In 15 to 20% of the time I will have to take on a loss, so I will have to close my trade manually, but therefore I don't have to sit the whole day in front of a screen. So the morning, the European markets are open. I can see what happens in Europe, but normally this is not really important for the US market. Only if something really bad happened in Asia, then I can see how the European market reacts, and probably we'll see the same when the US market opens. But normally I have family time in the morning. One of my 2 kids is in kindergarten, the other is still at home, will go to kindergarten in March. So I have just free time to learn, to read, to do whatever when my 2 kids are in kindergarten. And then after the lunch, I will sit in front of my PC and prepare for market open. So normally around 2:30 p.m. I can prepare for the opening. Sometimes we have news pre-market like today or yesterday, and I can see pre-market price levels from NASDAQ. The option market is not open then there we have to wait for market open, and I wait for market open until 3:30 p.m. my time. US markets open. This is 9:30 a.m. Eastern time, and then I can see where the price levels are, like today with Intel. So I could prepare for this Intel trade because I already knew the prices for Intel from outside of regular trading hours, because yesterday after the market close the earnings numbers came out and I already saw the reaction of the price of the stock, and I could prepare pre-market. We discussed it here in about 15 minutes before the market opened, and I was able to do it quickly here. And yeah, you see now the stock is rising back $27.45, and the price is dropping below 30 cents now. So I'm already made $9 per option contract. Not too shabby, but it was just a small trade here. But I wanted to show you here in a live stream that it is possible to trade it, and I'm not only sharing ideas, but also I'm a real trader, even if it's just sometimes a small trade. But I better want to have a lot of small winners, because my hit rate is 80 to 85%, and only 15% are losers normally. And these losers are higher than my winners, because I can only win 80 to 100% when the option gets to 0. Then this is the total profit I can make, and I cannot make more than 100%. So when it expires worthless, this would be 100% profit, but I want to buy it back after 1 or 2 weeks. So I will have collected 80% profit in a short amount of time, and I can take on a new trade. And therefore I have to take on more trades, because I want to trade small trades and making a high hit rate of 80% or 85%. But my losers, these 15% losers, will be higher, about 200% when I lose, because I will buy back the option when the price has tripled. So when I sold for 40 cents, then I will buy it back for $1.20. So this is 200% loss, but I will only have this in 15% of the time, because I have so many things in my favor, like time is in my favor, the implied volatility turning down is in my favor, stock going up is in my favor now, and this is multidimensional trading. This is what I like here, but I don't have to sit now 8 hours in front of my desk here just to watch this position going in my favor. This would be useless. So I can enter now a buyback for 8 cents, and then as soon as this price level is hit, then this buyback will happen and my trade is over, and my premium, my win is collected. It's finished. The trade is over. So this is pretty easy. I normally need only 30 to 45 minutes real trading in front of my desk just to going through my screening process overall. And therefore I just normally watch the first 30 minutes of the market when there's a lot of volatility from 3:30 p.m. to 4 p.m. my time. And then I will leave my desk. I have other things to do. And I will come back in the evening when my kids are in bed. So this normally happens between 7 and 8 p.m. my time. This is between 1 and 2 p.m. Eastern time. And then when the kids are in bed, I can go back to my screen and see what happened over the trading day. Maybe do another live stream or just look through the news and see if one position needs that I act there, or just doing nothing. And yeah, then close the day. The market closes my time at 10 p.m. And then yeah, maybe watch some earnings or just nothing. So I don't have to watch the earnings just because it's like a hobby. So my trading day is still my hobby. Even if I live out from the trading, I still love what I do. So sometimes I use more time on a day that I would normally need just to make the money. So if I just would do my trading style, this would take 30 to 60 minutes a day, not more. But I normally use 5 to 6 hours a day to learn something new, to read through news. And yeah, this is important for me because I want to take on new knowledge and I want to share the knowledge with you. Therefore, I'm doing these live streams here on YouTube just to share this knowledge for you. Let's just go back to Nasdaq to see what happens here. New highs here, 12,130 points. And yeah, this is what I like to do because it is still a hobby for me, even if it's my profession. And this is what I do the rest of the day if I'm not sitting in front of my screen or entering or exiting positions. So it sounds like every day is about the same, but every day is different. You should know it if you already trade for some month, because every day new news happen. In 7 minutes we will have the news here from the housing market, and this could act as a catalyst again, maybe to the downside, we don't know, or even to enter more buyers. And so every day is different, and I like this. Yeah, I sometimes take on a day trade, but I'm not the normal day trader. My day trades are just 5 to 10% of my portfolio maybe, and I'm not entering a day trade every day. I'm normally a swing trader, and I like to swing trade. 80-90% of my positions are options, and a small amount of positions are also futures. So when I trade as a swing trader in Nasdaq, I normally take on future trades. I buy the future, I sell the future. But when I trade single stocks, I normally trade with options. Yesterday, I took on a position on Tesla short. Yeah, this went not good for me, but this happens. This is part of trading. You cannot have a win rate of 100%. It's just normal to have some losers, but you have to know when to cut these losers for not giving back all your gains. Yeah, if you have some questions or you want me to analyze some stocks, just write them in the live stream here, and then I can bring up the charts for you. Let's just see what happens with some stocks here. Let's go back again to Euro USD on a 5-minute time frame. We still see it was dropping, but when the market opened, you see this rise here. So it acted already, and we saw that markets want to go higher. Now it's pulling back a little bit in the previous 5 minutes, and Nasdaq is still rising. So let's see if it was an early indicator that market could turn to the downside again. But from the resistance levels, we have no major resistance here. And we talked about this yesterday. So on a daily time frame, we have a lot of room to the upside now to 12,260 level. So there's still some room here, about 0.9% to the next major resistance level. You can see here, this was a previous day high on December 1st, and this was a day high on December 13th. So this should act as a stronger resistance area, but up there we have some room to go up to 12,260 points. So 120 points to the upside room, or 0.9%. But of course the market can change every second when the news are out. Therefore, let's just wait for pending home sales. Okay, CRM. Let's have a look at CRM. Oh, and Intel is going higher nicely. So implied volatility is now going sideways, but the stock is rising, only minus 8% now. And this is now pretty good for my options position, because you see the price went down to 26 cents now. So I'm already in the money, not in the money, in the green with the position. And yeah, $10, more than $10 per contract. Okay, CRM, Salesforce. Let's see on a day chart first. Looking strong. Let's see it on a week chart here to identify the important levels. So this is the high point here. We are testing the high point, should act as a resistance now here. Previous high point was $166.03. We are right at this level now. $166.80 was the high point today. So this should act as a resistance first. A little, I would expect a little pullback, and then on the second attempt a breakthrough. And when we can manage to go, then the next important level would be here, this round $195. This was previous high point. We tested 2 times. So this should be the next target points, and there is room up of 16% to the upside if we manage to break these previous resistance level here. To the downside, the supporting area should be at $125 here. And if I draw a Fibonacci, then let's go here from this low point to this high point. Then you see we also have a major Fibonacci level here. 61.8% Fibonacci is at $167.95, so about $168. This should also act as a resistance. So let's see if we close the day below here, we will probably see a little pullback, maybe to the $160 level. This is the 50% Fibonacci line. And we have another smaller resistance here at the 76.4% Fibonacci level, $178. And then if we manage to go above here, then we will probably see the full 16% to the upside, up to $195. So pretty strong on a week chart here, as you can see. Intel, big push. Perfect. That is what we wanted to see. Back to Intel here. I closed the chart, unfortunately, so bring it back right away. And see it on a 5-minute time frame. Yes, pushing $27.60. Looking really good. Hopefully we'll close a little bit of this gap we made here. So you can also use Fibonacci for gap trading. So this was the closing level of yesterday. I always use the low point and the closing of yesterday. You could also use the after hours prices. So if I enter after hours prices, you now see after hour trading. Here I told you the market closes at 10 p.m. my time. So this was when the earnings came out, then the earnings conference, and we closed the day here. So for me, this was midnight. And the after hours trading session is going up until 2 a.m. here. Then you see these line here, because then the trading day for US session is over. For me, this is already the new day here at midnight. And then we have pre-market trading. This starts at 10 a.m. my time or 4 a.m. Eastern time. And I normally use the low point here or the low point pre-market if it makes sense. But the problem is we have only low volume. You can see here pre-market and after hours, this is low volume. So normally the levels have more significance when we trade them with a lot of volume. But now here we have the important Fibonacci levels, because this is a 10% move, or maybe even more. Let's see, what was it overall? Yeah, 11% move, 10.98%, 11% move. And therefore, it will have significance, these Fibonacci levels. And you see, the news are out. Let's see for the news first for the housing market. Pending home sales plus 2.5%, crazy, went up, and the expectation was coming down. So yes, there could be now a little bit inflation, fear of inflation, but no recession risk at all, as you can see here. Michigan consumer expectations are also a little bit higher than expected. Consumer sentiment higher than expected. Current conditions a little bit lower than expected, but almost in line. So inflation expectation lower than expected. yeah, it's looking good for the market, so it should pull up. So this is a good trigger for a rise of more. But you never know what happened, because we already did this turn to the upside here. So maybe we'll now see what the EURUSD already has shown us, and this is a pullback. So you see in the previous 10 minutes we pulled back. Go back to EURUSD, what is showing us? More pullback. So yeah, sometimes it acts as an early indicator what will happen with the stock market. Yeah, not every time, but especially around the news, you sometimes can see what the smart money is doing, because this is the largest financial market of the world, and the largest currency pair is EURUSD. 60% of the trading volume happens here, and therefore I like to watch this currency pair, because 6 trillion of trading volume, of trading dollars, are traded here on EURUSD per day. And this is what is traded in a month over all stock exchanges around the world. And therefore this is so liquid, this market. And even if it's not a stock exchange based trading, because this is just a market between, or an intermarket of banks. Banks are giving the prices in a market maker system. Yeah, it's so liquid that I like it, and I want to see what happens here, because the smart money moves this market. It's difficult to move this market because it's so heavy, but sometimes you see an early indication of what will happen at the stock markets. Therefore, I like to see EURUSD movements for the stock market. So pulling to higher levels now. The news were good, as we said, but we never know if the bulls will win this fight. It's looking good for the bulls right now. We retested the 9 EMA line here on a 5-minute time frame, and we can also see on the other time frames like 15-minute and an hourly chart, we also see that it's looking good. It's in favor of the bulls. You clearly see here parabolic SAR is below the chart, indicating an uptrend, and you see here ADX is indicating a strong uptrend. DI plus is far above DI minus, and the red line is at the 40 level, so this is a pretty strong uptrend here. Everything above 20 is a pretty strong trend, and we already established this yesterday. You can see here on this hourly time frame, the red line went above 20 area when the European markets opened at 9 a.m. my time or 3 a.m. Eastern time, and then we started. So we went to the high point here at 12,075, and you still see yesterday we discussed pre-market this should act as a resistance area, and it acted as a resistance area. Then we pulled back to the 20 EMA line and new buyers stepped in, and finally at the day's end we made new highs. Now we are pulling higher, so making new highs. This should also be positive, and you still see it is in an uptrend since yesterday, or since the day before yesterday if you managed to enter here. But on an hourly time frame, we clearly see it was an uptrend yesterday. It turned just for 4 or 5 hours to a downtrend, but managed to go back to this uptrend and is still in there. The same on a 4-hour time frame, an uptrend for yesterday and today, and on daily time frame the same. We clearly see this uptrend, and still some room. Wait for the 12,260 level to come, and then we will see if we see some major reactions and pushbacks to the downside. But for now, all the bears, these early bears, are pushed out of the market. So never trade against the market direction. Always see direction and trade direction, not the news. We trade direction, but this time everything fits together. Good news, market is pushing. Therefore, respect market direction. Do not try to trade your own opinion or your own market decisions. Always trade what you see, and market direction is clearly to the upside right now. So if you want to take on an early short like I did yesterday, you have to take into account that the probabilities for winning trade will be low, and therefore take only a small amount of money if you trade against a trend or against the main trend, an overall trend, like on a day or week chart. There can be downtrends on a 5-minute time frame, like here yesterday there was, or the pre-market there was a downtrend. Of course, it always depends on the time frame you are trading on, but because I'm a swing trader, I mainly look at the daily and weekly time frames. And yeah, I want to look for my entries on a 5-minute time frame, 5 or 15 minutes for intraday. I do not use 1 minute time frames because there's a lot of fake breakouts. Like here, you will see a lot of spill to the downside here and fake breakouts, and therefore I'm mainly trading on a 5 or 15 minute time frame when taking on day trades. But for swing trades, I use day chart and week chart, or maybe 4-hour chart. This is the most commonly used. On your Nasdaq put, I think you are still in that position. What is your target, if you don't mind? Yeah, I still have this small trade, but I told you that yesterday I had this small trade, but I told you that I will be out if we go above this area where we are right now. So I already exited this position because it looked pretty bullish pre-market with these good news, and therefore I have no position here right now. My previous target was 11,750. This was the previous high point, as you could see. And the day before yesterday, we even went lower. The low point was 11,604 points. But you see these huge reversal we had. So this was also a bullish sign for the next days already. And therefore, I would wait now for minimum here 12,260 points for an early short trade, and then take on more when we are pulling back. So every uptrend will also have some down trending. You see here these 2, 4, 6, 8 consecutive days to the upside. We had 2 strong days to the downside, and now we had 2 strong days to the upside and 2 days pulling back, or 1.5, because on this day we went back again to the upside. So now we have 2 strong days to the upside. Let's see where we close today, and probably next week we should also have a stronger pullback than from this area here. And therefore I want to be in an early but small trade short, and I will take on more shorts on the way down, and my target would be minimum 12,000, better this area here where we closed, so the closing level of the day before yesterday, 11,873 points, or this Fibonacci area, 11,850. Around this level should be my main target. Yeah? First taking wins here at the 12,000 level, and then 11,850 points. This will be my main target of a pullback if we see one next week, but I'm not in a big position right now. Sometimes it's better just to have no position or only really small positions, and just to watch the chart rising if you don't want to trade long, because I think it is risky to go long here because you only have a tiny margin to the upside, or at least if you are a swing trader like I am. The margin to the upside is so tiny that I don't want to take on. Yes, it's a huge push. So if you are a day trader, this could be interesting. When we discussed before, the 0.9% is not bad at all for a day trader. But I want to have 2, 3, or 4% swings to one direction. And therefore, because the resistance area begins here, I didn't want to take on a long trade here, and better taking on a short trade. Even if it's early, even if it's against the direction here on day chart, you still see we are in this sideways trading phase. And always when we reach these high points, we had a strong rejection here. And therefore I think this will happen again. We normally don't see a push through on the first attempt. We always need a second attempt, maybe a third attempt. So this takes time. We will not push through without any major news on one day. Next Wednesday can be important because then we have the Federal Reserve meeting. So let's finally see the news for next week. We have to prepare for next week. Just filter out all the 1-star events, so only see the 2- and 3-star events. On Tuesday, we have CB Consumer Confidence, half an hour after the market is open. On Wednesday, ISM Manufacturing and Jolt's job openings. This will be important. Half an hour after the market is open. ADP non-farm employment change, initial jobless claims. This will be 1 hour and 75 minutes before the market is open. So Wednesday will be really important, especially because we will have at 2 p.m. FOMC statement. So yes, there will be a lot of movement and the interest rate decision. Like we discussed before, the expectancies are 98% right now for a 25 basis points move. So everything else, 0% or 50 basis points, will be a huge surprise for the market, and we'll have crazy movements. But yeah, I don't think this will happen. 98% think that we will see 25 basis points. This should happen, but it of course can cause some major movements. 200, 300 points would be normal for Nasdaq. Then initial jobless claims like every Thursday, and on Friday non-farm payrolls. This will be again important 1 hour before the market opens, like every first Friday of a month, and unemployment rate. And ISM non-manufacturing PMI half an hour after the market is open. So the most important days for next week in terms of economic news are Wednesday and Friday. And then you can look through the earnings calendar and go through, maybe I have it here in my Discord, then I can just look up in Discord and see, where is it here, earnings forecast. I had a monthly number, but let's just go through here. So we see SoFi before market open on Monday, NXP Semiconductor. Monday is not really interesting. UPS is more interesting on Tuesday before market opens. AMD, Snapchat, of course, Electronic Arts. So Tuesday after the market close can be important, but these are smaller companies here. AMD is not so small, but yeah. Walmart, the WM. Not Walmart, T-Mobile US, this is a large one, so this can cause major movements. Peloton, smaller one, Altria. So yeah, Wednesday again is important before market opens, and of course after market close. Meta, this will be important. This is a huge player here, especially of tech stocks. So Wednesday will be important. And Merck, yeah, Philips, Lilly, Apple on Thursday will be important after the market close. Amazon, Google. Oh, you see here are some huge stocks reporting, companies reporting on Thursday after market close. So in terms of earnings outcome, Thursday will also be important. And Friday we have only before market opens, no major news. So in terms of earnings, next Thursday will be important after the market close. Unfortunately, I will not be able to live stream it here in English because I normally do my German live streams together with my colleague Mirko on my German channel. And then I will be with the clients for 1 hour until the market closes. So I will not be able to live stream these outcomes of earnings. But yeah, we will discuss this in the next live streams next week. So of course Wednesday I will host a live stream here, and yeah, let's see if I do this one here for market open on Tuesday, but Wednesday I will probably host a live stream before market open, an FOMC meeting. Let's see if I have the time when the kids are in bed. This will be the most important day in terms of economic news next week. Good. Okay, I think this was enough news for you. I hope you got some interesting information to use for your trading. Wish you a nice trading day and a good start into your weekend. And we will meet us next week. If you have some further questions, just write them down in the comment section. And I wish you a nice start into your weekend. Happy trading. Goodbye.